Oh, hello. I'm in Texas on the road. Today I want to talk quickly about the poor and what goes wrong, how they save and stuff. They misunderstand everything with the risk. So I now she's making very little income. She has stashed away a lot of savings, and she has it in a CD kind of, and she gets no interest. And there's like sitting, I saw it like $15,000, $15,000, and I didn't understand. I said like, okay, you need a emergency fund, let's say 5,000, but the other 10,000 she should put in an index fund in the stock market. Why does she need the whole 15,000 liquid? I don't get that. So, but she avoids risks, and I think that is a mistake the poor do. All of them do, or most of them, because they avoid any kind of risk. And if you want a decent return, a decent interest, you need a moderate risk. So that's what a lot of people get wrong. Also middle class people, they save maybe a lot, but they don't invest it in a smart way. So you always look for a little risk, a little jump up and down volatility. You can buy an index fund, a Vanguard, and if you invest it for more than 3 years, let's say 5 years or 10 years, you can expect a decent return. If you have it in a CD, the money doesn't jump up and down, it's always steady, but there's no interest, almost zero interest. So I think that's what a lot of people get wrong. So you look for a risk, moderate risk, and you shouldn't put it all into a CD. And then what also goes wrong, I think a lot of poor people play lotto, and these scratch cards, and they pay $25 for a scratch card, and they think that it's a smart investment. I don't know what they do, but half of the lottery price you pay goes to the government, so there's a fee of 50%. The same with gambling and casinos. I think there's not 50% fee, but a lower one, but the casino always wins. Statistically, to play lotto, go in a casino is a stupid way. It is, you can just flush your money down the toilet. The chance to win is so little, and to make the jackpot is so little. You can't really do the people can't calculate it. So it's a stupid thing how people see risk and reward as it's just wrongly done. And what is also very risky is like a lot of people, how can you go quickly broke is you buy a too large home and you finance it, or a too large, like they finance a lot of cars, and they spend a lot on things. They go broke, they lose on value, like a brand new car. Think about it, people finance that, and within 3 years they lose 30% or 50% on a brand new car. It's just silly. It's a bad investment. It loses, it rusts, it rottens. Like all the assets that lose in value, that's what the middle class likes to invest. That doesn't go up in value. Like a good real estate goes up in value long term, or the stock market that increases, but a car, that's a bad investment. You better buy a used car and pay it in cash, and that's it. Yeah, so it's really fascinating what people do, and also what people like, how they consume, what kind of knickknacks they buy, what the house is like. You have to dust all that stuff, and they keep on buying and buying, like 3 pairs of shoes. Some people have like 100 pairs of shoes. I mean, like, and when they move, they have like hundreds of boxes. It's just crazy. And then they have so much stuff, they don't know where to put it, and they rent out like containers. It's just crazy. Like, there's so much waste going on. I don't get it. I just have rather less stuff and enjoy what I have more, and be thankful for what I have, and don't hoard all the things. There's no really, it doesn't satisfy you, I think, for the most part, all the things people hoard. Okay, that's all for today. Bye.